Hey everyone, welcome back to the 1% channel. Today's video will be covering the top 3 stocks of April 2021. Before we get started, I'd appreciate it if you could like the video and subscribe to the channel with notifications turned on so you don't miss out on any new videos. Okay, so without further delay, let's get straight into our top 3 stocks of the week. Alright, coming in at the number 3 spot, we have Micron Technology, ticker symbol MU. Micron Technology has taken advantage of the favorable supply and demand conditions in the memory market in the wake of the novel coronavirus pandemic. Supply disruptions and strong demand for memory chips have sent the prices of DRAM and NAND flash memory soaring, helping Micron turn its fortunes around over the past year. Micron is anticipating $7.1 billion in revenue this quarter, which would translate into 31% year-over-year growth. The company expects earnings of $1.62 per share this quarter, which would be nearly double the year-ago quarter's figure of 82 cents per share. Micron should be able to sustain this impressive momentum in the coming quarters as well, as the demand for memory chips is anticipated to grow faster than the supply. Micron estimates that the DRAM market will remain severely undersupplied in 2021, as supply growth won't be as strong as the bit demand growth of 20%. This isn't surprising, as DRAM manufacturers reportedly cut capital expenses by 20% in 2020. This bodes well for Micron, as the company gets 71% of its revenue from the DRAM space. However, Micron isn't very upbeat about the NAND market's prospects, pointing out that supply growth is going to exceed demand until there are capital expenditure cuts. But the overall picture appears to be bright, as the DRAM market should remain in strong shape for the remainder of the year and drive the bulk of Micron's growth. Alright, coming in at the number 2 spot, we have Salesforce, ticker symbol CRM. According to research firm McKinsey & Company, 58% of customer interactions occurred digitally in the first half of 2020, up from 36% at the end of 2019. That shift emphasizes the need for customer relationship management, CRM, solutions that help enterprises provide clients with positive digital experiences. When it comes to CRM, Salesforce is the best in the business. This tech company has steadily reinforced its market-leading position in recent years. In fact, in the first half of 2020, Salesforce captured nearly 20 cents of every $1 spent on CRM solutions. By comparison, Oracle took second place with a market share of just over 5%. Notably, Salesforce has benefited from its first-mover status in the space, which has given the time to develop an unrivaled CRM solution. Its Customer 360 platform is a suite of software that helps disparate enterprise teams, think sales, marketing, commerce, and customer service, unify data and collaborate efficiently to better serve their customers. Last year, Salesforce delivered solid financial results with gains driven by the digital transformations made necessary due to the pandemic. Revenue jumped 24% in fiscal 2021, gross margin hit 74.4%, and free cash flow rose 11%. Looking ahead, management believes the company will reach $50 billion in annual revenue by fiscal 2026. And according to CEO Mark Benioff, Salesforce is growing faster than any enterprise software company of its size ever has. As a final note, Salesforce recently launched a new product, Hyperforce. This updated version of its Customer 360 platform allows clients to deploy Salesforce apps in public clouds, giving them access to benefits like enhanced elasticity, i.e., clients can easily scale their cloud computing sources up or down as needed. In the coming years, Salesforce's innovative culture and market leadership should drive the company to even greater success. Okay, coming in at the number 1 spot, we have Twilio, ticker symbol TWLO. Twilio provides a communications platform as a service with software tools that make it easy for developers to add features like chat, text, voice, email, and video to their applications. This translates into reduced costs and complexity for Twilio's clients, because they don't need to provision their own infrastructure or negotiate contracts with multiple telecom carriers around the world. Its product suite also combines these tools into more complete solutions. For instance, Twilio Flex is the company's fully programmable contact center platform. It includes features like intelligent call routing and AI-powered chatbots, both of which improve customer service. And from the client's perspective, Twilio Flex offers more flexibility than any other client-centered solution on the market. Like Salesforce, Twilio is a market leader that benefits from its first-mover status. That advantage has helped Twilio add new customers and grow its top line quickly in recent years, with both of those metrics more than quadrupling between 2017 and 2020. The company ended last year with revenue of $1.76 billion and more than 221,000 active customers. But investors should be aware that Twilio is not currently profitable. Free cash flow came in at negative $26 million last year as the company continued to prioritize revenue growth over profits. However, its revenue net expansion rate hit 137% in 2020, meaning that its average customer spent 37% more last year with the company than they did in 2019. That suggests Twilio's investments are paying off. Finally, in November 2020, Twilio acquired customer data platform operator Segment. CEO Jeff Lawson explained the move, saying that data silos were the biggest impediment to digital engagement and asserting that this acquisition would allow Twilio to break down that barrier for its clients, enabling them to deliver great digital experiences to their own customers. This should make Twilio's platform an even greater asset, further solidifying the